Hello everyone, this is Corey Mitchell with TradeThatSwing.com, and this is your swing trading stock market outlook for the week of September 18th. Each week I go through this process just to decide how aggressive I'm going to be deploying capital. And these are some of the watch lists that I look at. This one, the current stock watch list, was updated around the end of last month, and it's just actual setups that were forming. Best swing trading stocks list for September is just stocks that are very strong recently but may not have setups forming, so you have to watch for the stocks to set up. And then these are just some other lists that are based on more strong performance or strong fundamentals, and usually stock performance as well. So those are the stocks I've been watching, but as we'll discuss, and as you can see at the bottom, I have a history of basically what I've been doing here. And it's been a little while since I've been taking trades. This, it kind of hasn't been great conditions. And here's a look at several indices. We have the NASDAQ 100, the S&P 500, the NYSE Composite, the Russell 2000, and then we also have the Canadian Index and Bitcoin just thrown in there to fill in a spot. So if we look at this from a price action perspective, we had this decline in August and we are trying to claw our way back. So NASDAQ, a little bit of an uptrend, but definitely sluggish last week. We just barely crawled above that prior high, but we haven't dropped below this swing low. So we're still in that sort of trying to push higher recovery phase. And same with the S&P 500, a little bit weaker. We didn't get to the prior high, but we haven't moved back to that low either. So, we're still trying to push up. Same with the NYSE Composite, trying to push up after that August decline. The Russell 2000, bit of a different story. We had the big sell-off, pushback, and we're pretty much at these lows and almost going back to late June, July. We're hanging out in that same area. With these other indexes, we're kind of above those levels. And so overall, not great. I'd say it's a little bit mixed. The Russell 2000 looking a little bit weaker. These, not a convincing recovery as of yet. And one bright spot, Canadian Index has been strong recently, but the downside, it's been in an overall range. So this is kind of getting to one of those points where we see if it's actually going to break out higher or just, keep chopping around. Bitcoin also choppy and hanging out near these lows. Wouldn't be surprised if it took out. We had this low here, which didn't get taken out by that. So wouldn't be surprised if we got a bit of a dip here. That's the point where we get to see if it's a false breakout. So if we get the drop out and then we start rallying again, I prefer that long. If we just kind of drift up here, these levels often get clipped out. So we'll see. But overall, rangy, not really trending in the downtrend. So we need some sort of bullish a catalyst, either a big move up and a pullback that stays above the prior swing lows, or we get the drop and it can't get any momentum to the downside and we get the spike back up into the range. So yeah, basically what we just discussed, mentioned here. Overall conditions not ideal. Market health indicators, which we'll discuss next, are telling us the same thing. Thus, I'm going to stay away from taking long swing trades until conditions improve. Let's check out the market health indicators. I have a few of them on the bottom here. They just look at some different parts of the market, or look at the market in a different way. So we just have the S&P 500 up here. I have some percentages on here. These are the declines, 8%. 9% before the rally, 3% decline, 2%, 2%, 5%, close to 6% on this last one. So still well within what we've witnessed so far in the uptrend, a 6% decline, pretty small. So that so far isn't anything significant. But, we could chop. I think more of the danger is not the massive decline, because then it's a little more obvious, right? If you just get a huge sell-off, most people aren't just jumping in to buy swing trades. I think the more dangerous situation is when you get these smaller declines, but then it just chops sideways. Maybe it goes down a little bit more, maybe it goes, up a little bit here and then chops around. But chop, I think, is what destroys most traders, because they keep taking trades hoping that big next push happens, and it just never comes. And that's why I like these indicators, is they're pretty good at getting me into the market when it's moving up and keeping me out when it's choppy or declining for long positions. So we can see here, this is how many stocks are above their 50-day moving average. Nothing magical about the 50-day moving average. It's just a crude measure of how many stocks are in short-term uptrends. And when you have lots of stocks below their 50-day, you have lots of stocks that are either choppy or not doing so well. And we can see about 33% of all U.S. stocks, that's the turquoise bluish one here, and 33% of S&P 500 stocks are below their 50-day. Only 33% are above their 50-day moving average. So that's not ideal. Most are not in short-term uptrends, so just a frowny face that tells me to stay away. Volume, not really important. Some people notice this volume spike on Friday. You will see these occasionally on Fridays. They're due to options expiration. So just more volume because all those options are expiring. Not significant that it was a down day on high volume. This is the daily average movement of the S&P 500 and just the percentage. And uptrends are marked by smaller movement, and downtrends are marked by big, you'll see big daily drops of 2% or more. We have not had any 2% drops. It's gotten a little bit more volatile recently, but you can see this is more representative of an uptrend when you have very little daily movement. It's kind of, you move up a little bit, you move down a little bit, you move up a little bit, you move down a little bit from day to day. And we're still seeing that. We haven't had any big 2% down days. So that's encouraging. That's one of our health indicators that's still in good shape. This is the advanced decline line for the NYSE. And what it is advancing stocks minus declining stocks is a cumulative number. And it's basically kind of just running flat here along with the S&P. So it's not really giving us any additional information. Sometimes it will. The S&P might be looking really sluggish, and this is just moving up hard. That's a good bullish sign. Or the S&P might be moving up while this is moving down. That would be a sign to maybe to have some caution. But right now it's pretty much just mimicking what the S&P 500 is doing, so nothing important going on there. This is up volume divided by total volume on each day. Just gives us a sense of how much enthusiasm there is for buying or selling. And back here in late August, we had a back-to-back 80% plus up volume days, meaning 80% of the volume that occurred on those days occurred in stocks that finished higher on the day. So a lot of buying enthusiasm, and that kind of was right in this area here. So, and that was a little bit of a bottom, and we haven't really done anything since then. So it was a thumbs up back there, but until we actually start moving up, it's maybe a bit of a dud signal. So we want these other ones to start confirming to show that the price action is also confirming those signals. Sectors on the move. Main sectors to watch: energy, communication services, consumer cyclicals, financials, basic materials. If you go through, that's basically your 1 month top performers. Most of them are hanging out near the top on the 3 month as well, and also on the 1 week as well. You got financials, basic materials, consumer cyclicals, energy, communication services, all kind of clustered near the top. So these are main sectors I'd keep an eye on. You do not have to specifically look in these sectors or anything. This is more if you're really pinched for time and you want to reduce your scan list down, then maybe just focus on some of the top sectors. If you have time to scan, usually when I run my scan, I just look at all the sectors. I'm just looking for the top stocks, and they're generally going to be in these sectors anyway. But I'll just run the scan, and whatever good comes up, I'll consider it. what I'm doing right now, I'm going to sit in cash. It doesn't look bearish enough for me to go short. It doesn't look bullish enough for me to go long right now for swing trades. And always I'm day trading, swing trading, investing. If you're interested in any of those, you can check out these articles or courses on that. And I hope you have a great trading week out there.